Hi guys, welcome to Grow Well with Nevu. Today we'll be looking at Netflix. Why you should consider Netflix, whether you should buy or whether you should sell. Before I get started, I'd like you to please like, share, and comment on this video. Also do subscribe. Let's get started. Many of us are familiar with Netflix. Netflix, they are a streaming giant, right? So we'll be looking at the financials. Let's look at how their revenue went. So if you look at Netflix over the past 5 years, so this analysis covers Netflix over the past 5 years. So if you look at their revenue numbers, it's been going up. This is what you want to see with a company that the revenue is growing. Also for profit, Netflix is a profitable company. You can also see that their profit is also going up. This is what you want to see. So in terms of revenue, Netflix is doing amazingly well. Then let's look at the growth rate. If you look at the growth rate has been going down. This is not really good enough, right? But you have to look at this in terms of the competitive environment. Netflix is facing severe competition from big competitors like Disney Plus, other streaming giants. So the streaming war is real. But despite this competition, Netflix is having double-digit growth. This is amazing for a company that is over 20 years to still be having double-digit growth. Look at segments. So Netflix has three segments. They have US and Canada, Europe, and then Latin America. All of them are growing. All of them are growing. But the growth rate is slowing down. This is quite understandable, especially in Canada and US. So Netflix increased their prices, and that's kind of helped their growth. But the numbers are still they're still good. They're still good because there's still growth, right? Though we want it to be at a faster rate. Then let's look at subscribers because this is very very important. How do because Netflix makes money by paying subscribers, right? So if subscribers are going down, the numbers are going down, that means that's bad business for them, right? So look at total subscribers. I have to mention here that this is in thousands, so this is 200 million. Then, but something is worrisome, right? The subscription numbers. So the addition, of course, with every subscription, some people join and some will leave, right? But the net addition, notice that it's been going up, but last year it went down dramatically. This is this is part of the reason why the share price of Netflix is going down. But we'll get back to that in the later part of this video. But the addition is going down. So in as much as Netflix is growing, but they are not growing at the rate we want them to keep growing. Now let's look at cost. Look at the gross margin. This is amazing. It's going up. Despite the huge competition they are facing, their margins are still going up. It's just amazing. Even all the margins are going up. Netflix they're able to manage their cost well amidst the tough competitive environment. And let's look at cash flow. So cash flow is not really impressive. Cash flow from operation, see that it's been negative apart from the last 2 years. Now, if you are familiar with accounting, you know that cash flows and profit are two different things. But I looked deeper into this and discovered that why Netflix is having negative cash flow is because of they've been using a lot of money to produce original content. If you're a Netflix subscriber, notice that there are a lot of original content on Netflix rather than what you are doing in the past years where they just buy content from movie producers, but now they try to produce their own content, which has been paying off, right? Because what that does is that Netflix originals can only be found on Netflix. So something like Money Heist that Netflix purchased, once they got it, if you want to watch it, you just have to be on Netflix to see it. That's one good thing it does for them, right? Now also cash flow to profit has been negative, but it's coming up. But the good thing here is that it's no longer negative, but we want it to be as high as possible, right? We want it to keep going up. Also, the same thing with cash flow. So why I'm impressed with Netflix revenue numbers, I'm not really that comfortable with their cash flow position. Now let's look at leverage, debt to equity. If you are familiar with finance, you know that you can influence your earnings by taking on more debt, right? But look at this, that debt to equity has been going down, which is what we want to see. The interest coverage currently is at 8, showing that these guys they make enough money to be able to cover their interest. This is amazing. So in terms of debt, I'm satisfied. Now debt to capital have been relatively flat, which is cool. Now look at debt issuance. 2017, 2019, they issued a lot of debt, but look at now. The debt in the past 2 years, the debt issuance has been going down. Even during the COVID year, the debt issuance went down. This is what you want to see, right? Return on assets. Return on assets is amazing, 12%. Return on equity, above 30%, showing that if you're an equity investor, you will have outperformed the S&P 500. Also, return on capital employed, 16%. This is excellent. This is amazing. Now, I looked at valuation. So my assumptions are that I used the average historic growth rate for the last 5 years. I looked at the margins. I assumed that the average or the 5 year margins will remain constant. I look at the P ratio. So basically, Netflix in the past 2 years, their P ratio has varied from around 36 to around 8. So I have a conservative estimate, average and high. So conservative estimates, the share price is 396, the average is 566, and the highest is 849. Now let's look at the technicals. So technical analysis, this is the share price of Netflix. When they released their earning, share price went down by about 50%. So investors sold out. Now you know what happens in market. For everyone selling, someone is actually buying, right? So those guys buying, why are they buying? This is when there's blood on the street, this actually went to buy. If we look back during this correction, if you bought, you enjoy some profits. But there's something I want to highlight in this technicals. Let me bring out the moving average. So I'm going to use what to call exponential moving average. So I'm going to move this to 200. I'm going to make this to 21. I'm going to make this to 50. These are what I normally use. So the settings. So let me do this fast so we can be able to differentiate. Let me change it to weekly. So as an investor, what you ask yourself that yes, will Netflix be available in the next 5 years? Will Netflix be available in the next 10 years? If that's so, then you know what to do. Now let's look at the 200 weekly EMA. The last time Netflix went below that was in 2011, and since then you could see what happened. So when they went below that, they crashed by about 77%, but today they went down by about 50%. But even from the whole crash, they've been able to come up by 16%. So if you ask yourself, 3 to 5 years, will this company still be available? And Will this company still be able to deliver this kind of returns? I think they'll be able to do that, right? So if you think so, then you know what to do. Before I conclude, I want to show what analysts are saying about Netflix. So let's go to Yahoo Finance. So Yahoo Finance, this is Netflix analysis. Can we let's see the so out of what one analyst, 11 are saying you should strong buy, 14 are saying buy, 14 are also saying hold. Then no one is saying you should sell. Basically, that's all about Netflix. Please do not fail to like, subscribe. If you have any comments, maybe there's an angle you are looking at Netflix that I didn't mention, you can drop it in the comment section so that I will address it. Share this video, like and subscribe. See you in our next video. Bye.